What happens is typically founders, create decks where they put in a lot of information about the market and other things. But most investors know all that, or they think they know all that. What is important is for you to make every single slide that you present very unique, where the insights come from you.
Awesome. Great. Hello, everyone. Welcome to today's special. My name is Ketan and I'm your host. For those of you who are joining us for the first time, today's special is a community first initiative for F&B entrepreneurs, restaurant owners, marketing folks to better their game at restaurant marketing. And I am really, really excited about our guest today, Hari sir. Hari sir has been at the forefront of helping restaurants raise funds, mentor them, lead them through investments across the past many, many years. Welcome to the show, sir. Very excited to have you.
Thank you very much. Nice to be with all of you.
Awesome. Sir, so we'll just get into the questions straight away, right? Because we have a lot to discuss and I'm sure everybody has a ton of questions. So my first question to you is, how does a restaurant or a restaurant owner know that they're ready for funding as opposed to continuing, bootstrapped for a few more years?
First of all, restaurants today mean also cloud business, right? So conventionally, restaurants means, places where people go inside, sit in a place and eat. Whereas today the food business is across the board, which means we have many brands which we don't go to the brand, but we buy from the brand, we consume that brand, and we love those brands. So it's typically we would call it as an F&B business. And when we are actually selling directly to a consumer,
Mm-hmm.
then what happens is it becomes it's really a food business. Again, here we can again classify it into two portions. One is people who sell ready to eat, ready to cook these type of foods, and then other people who sell hot foods or desserts or drinks and things like that, which they make fresh, and as soon as the order comes, they deliver. So I think in today's context, everybody needs to build a business which is sustainable and which can grow, because the challenges in the marketplace are huge. And until unless you have volumes, it is very difficult for you to survive. That's one of the reasons why many restaurants open and shut down also very quickly.
Right.
Whereas everybody or anybody who's coming into the restaurant business today needs to have a very clear financial model so that they can be sustainable over a period of time, and it also generates enough money for them so that they can keep on investing. So
Right.
I would say that the day to start is, the day you start your business, or even before that.
Okay. So if you can't just get into the business and hope for the best, right? You need to plan this properly, talk to an expert like yourself, and get the basics in place.
See, actually, it doesn't work that way. Life is so different for different people. Sometimes a very small activity, turns into a huge business opportunity. And sometimes a very planned activity, actually collapses or falls in that. But it's always good to have planning and also believe in one's instincts. There is a lot of things with entrepreneurship has to do with instincts. So it would be good if people, have confidence about themselves and their ability to see a market which others are not seeing. And this is one of the characteristics that I see in many entrepreneurs who are
Mm-hmm.
able to see something different than most of the other people in the same business or same category. So, that actually, separates a good entrepreneur who can be funded to a
Mm-hmm.
good entrepreneur who cannot be necessarily funded.
Understood. So the value of gut instinct cannot be overestimated. Data is good, but gut instinct is also important, is what you're saying.
Yes, I think it's always a combination. For example, I like some food, right?
Mhm.
So it may not be necessary that everybody is going to like that food, right? So at the same time, I may not like something, but I know that the market will like it, right? So these are certain things which, you just don't go with your personal preference, but you go with a gut saying that a very large number of customers will like this. That's why I want to do this.
Sir, you have been an investor in companies like Chiliza and Samosa Party and Biggies over the years. What are three common mistakes that you see founders making? मतलब ये गलतियां होनी नहीं चाहिए, but they're forced into making those mistakes, or they don't probably know better.
See, mistakes always happen. You
Mm.
cannot avoid not making mistakes. The only thing is how do you learn from those mistakes and how costly are those mistakes? That's what is very important to understand. Till you make mistakes, you do not learn. Till you make mistakes, you do not get insights. So you as a F&B founder is like a scientist who is continuously doing experiments. So
Yeah.
you are failing all the time, and only one or two results are probably successful, which you actually take and run. So the ones which are successful, that you take it up and scale. So
Yeah.
if you see, every entrepreneur who has made it big, they've all experimented and then come up with something which worked. And it's not that what worked today is going to work tomorrow. So you need to continuously be innovating and changing and analyzing what you are doing. So mistakes are very common. People
Mm-hmm.
should make mistakes, but they should not be foolish. There are many people who tend to be foolish, which means the customer is saying, no, this will not work. But still, they feel that, no, this is going to work, and they keep on pushing it. And at the end of 1 or 2 years, they realize, oh my God, it's not going to work. So you really need to be able to get into insights very quickly with whatever data you are getting. Customers are the best people to give you information and feedback. So listen to the customer, use your instincts, and listen to your team members, and then take a decision in terms of what is working, what is not working.
Right. So based on what you're saying, it's listen to your customers, follow the data, listen to your team. They know better because they're on the ground, and always know what you're getting into from a modeling perspective, financial modeling perspective, right? Okay, fantastic. So, and you've also invested in businesses like House of Biryan and Biggie's Burger. What was their unique value that made you say that, okay, this is a good investment to probably make?
You see, at a very early stage, what happens is you typically bet on the entrepreneur. And what is the vision of the entrepreneur? What does the entrepreneur want to do? How big does he want to take his business to? Does he believe in brands? Because in the food business, it's all about brands. People buy brands. So
Right.
whether a McDonald's is good or bad, I always, if I see a place where I need to go and eat, if there is a McDonald's, I will probably walk in there. Or if there is a good Indian brand like Wow Momo or something, I would walk in there because that's very familiar. So people buy brands. So if you see, for example, in the case of Samosa Party, I was one of the early persons who committed in Samosa Singh. When the Samosa Singh started, at
Mm.
that time, she had approached me and I said, okay, I'll invest. This I'm talking about maybe 10, 12 years ago. That's
Okay.
when they started.
Right.
But unfortunately, what happened was, a large VC came in, and the VC said, "No, no, we are coming and putting in money, so we don't want any angel investors."
Oh.
So we were not able to, invest, though we had committed earlier. Then subsequently, 2 to 3 years ago, Samosa Singh again came to Indian Angel Network for a fundraise. So
Okay.
that's when I saw the deal. And when I saw the deal, I was a little surprised because they were already VC funded. Why did they come to a angel fund or angel group post that? But anyway, I had committed. I had seen them, and because I knew the founders were very good. They were very at that time. I would say that they were the first people to actually crack this space. I thought I would again invest. Sooner after that, I got a call from one of my founders, early founders, and he said, "Sir, I want to introduce you to a couple of people, who are Samosa Party." I never knew about Samosa Party, but I had seen them once when I was in Koramangala in the mall. So I
Mm-hmm.
remembered them, and then I met the founders and I saw their numbers, and it was pretty good. What they were doing was pretty good, and their food was very good. See, one of the first things that I do with any food brand is to taste the food. So if the food is sort of very interesting or food is very standard, that's when you know that these people understand the core thing in the business, because ultimately the food has to speak.
Right.
Whatever money you spend, whatever branding you do, your food has to be consistent, and it has to have some standards. So samosas were very good, and that's when I decided, okay, let me take them forward. So they already had a VC investment, but they were looking for their next round, somebody to lead the deal. So that's when they came to me, and I set the valuation, and we moved forward with that. So the basic thing is the founders, the food, and what is the thesis. See, building a business out of samosa is something unheard of, because
Right.
samosa is available every street corner, in most of the country. And
Right.
today, if we believe in some of the statistics which are not verified, there are 6 crore samosas which are sold every day in India. 6 crores. So if you look at what a small brand would sell, it is just about maybe 50,000 or 1 lakh a day. So you just see the huge potential in the market for a brand to be created in that category. So that way, both Samosa Party and Samosa Singh are, at least category leaders. So they have built this as a category. And today there are many other small brands which have come up locally. Though we know samosa has been existing for maybe donkey's years, and we would like to go and have a samosa from our favorite corner shop or from a sweet shop, either in Delhi or in any other place, right? So it's very important that the entrepreneur, knows what they are doing, and the
Mhm.
food that they produce is good, and they have a large vision, because investors come to make money.
Of course.
So when I say investors come to make money, so if I am putting, let's say, 1 crore for a business, I expect that 1 crore to become 100 crores. So
Yeah.
if I am taking 10% of your initial company, let's say at a 10 crore valuation, so I hold 10% of your company and 1 crore. So when I have to get 100 crores or 50 crores, your valuation has to multiply that many times, which means you have to be at least 450 crores for me to get 50 crores out of that investment. So you really need to have a vision where you want to scale the business. This is one side. But there are many food entrepreneurs who are very passionate. They are not
Mm.
interested in the money game, in the sense they are not interested in just earning money. They build premium brands, and for
Mm.
them it's more about catering to a very small group of customers and making a business out of it. They don't want to scale, see, because premium things, the moment you scale premium things, the value comes down. For example,
Mm.
you cannot have two Amitabh Bachchans. So
Yeah.
the value of Amitabh Bachchan will come down if there are two. So in a similar way, brands actually have their own strategy, and there are many entrepreneurs who don't want funding. They want to have the pleasure of running the business with customers' money and at their own pace. So there's also nothing wrong with that. There are plenty of brands which have grown like that, and after a particular point of time, there are investors who approach them and tell them, hey, why don't you do this, why don't you do that, and some of them get I would say some of them agree to those type of moves and move forward. But ultimately, it is the entrepreneur's call in terms of how he wants to do the business.
Fantastic. And before approaching an investor for fundraising, uh, what are the what are the unit economics that you would like to see as an investor when somebody's asking to raise a fund?
See, the most important thing in the food business is what is your food cost.
Hmm.
So your food cost, in my opinion, has to be somewhere in the range of 20 to 25% ideally, especially
Okay.
if you're doing business both on the cloud and in dining. So
Okay.
if you sell something for 100 rupees, your food cost should be just around 20 to 25 rupees, because you
Understood.
then pay the distribution channels their commission, and then also some discounts, and then also some advertising and things like that. Almost 50% is gone from that. So you are only left with 30%. If your food cost it at 20%, that 30% is good enough to cover the cost of, let's say, whatever is your kitchen or your store and things like that, and contribute something to the corporate. So
Understood.
I think food cost is very, very important.
Okay.
The second thing is, how do you sell? For example, today we have seen, even in organized business restaurants, almost 50% business is coming from the cloud. So when you sell from the cloud, a lot of your margins are reduced. Though there are brands which sort of increase their increase their selling price when they are putting their menu in the cloud. But I think whatever it is, the margins in the cloud business for many brands are very low, or most brands are very low. So it's very important that they need to keep their fixed costs very low and their food costs very low. Because margins to tomorrow, if the platform say that I'm going to increase by 2% or 3%, you're
Yeah.
totally at their mercy. So
Absolutely.
you can't say no, I will not do business, because today we have only a few people who literally are monopolies in that space. So till the market becomes more, I would say, vibrant with more and more opportunities for food brands, you have a higher cost of distribution. So I would say that food cost is very important. Other than that, controlling your rent. See, there are many people who get fantastic places, pay high
Mm.
rents, and then they struggle. So this is a
Okay.
very common thing which I see in many food business, that you take a place, which is very expensive, and you expect that that place is going to start delivering profits, but it really doesn't happen in most cases. So what happens is you have to be very careful when you are renting premises for dining outlets. Cloud kitchens is fine because you don't need you don't need a high street or a mall type of location. But for anybody who is doing dining or takeaways, the rent is a very very big component. So you have to be very careful about the rent. Manpower costs and many of the other costs are very standard. For example, whatever software you are using, everybody would pay typically the same type of
Right.
price, right? So even for promotion, you would put the same value. So I think the things that you can control, you should be able to control. So money is in buying, not in selling in today's market.
Oh, fantastic. That's a great insight. And we talk to a lot of restaurants day in and day out, right? Thousands of them. And I see where your point about controlling these third-party costs come in, because a lot of the restaurants that we work with are struggling with that. They're actually bleeding because they eat into their margins and their profits, and there's no real easy way out for them.
Yes, absolutely.
Right.
And today's business has become very challenging with a lot of competition, and good brands are losing market share. So they all need to reinvent themselves.
Right.
Again, there is today, for example, a pizza can be available for 50 rupees to 500 rupees, right? So customers, are bargain hunters. At the same time, if you don't have a brand, people don't come back to you. So if your brand is known, people like your brand, then they hunt for your brand, and then they order. Otherwise, people from far away come and come to your place and have food. So that's also something which I've seen, especially in Bangalore. There are kitchens, where there is only one kitchen, but they do about 8 to 10 crores of business a year just with one kitchen, and all
Wow.
delivery only. So these are all things that we are seeing now, that the market has totally changed. See, what was true before is no longer true today. So the online, and people are spoiled for choice, which means, the moment you start getting 10-minute delivery today, good brands of biryani are delivering biryani in 10 minutes time. So
Yeah.
so once you get a good biryani in 10 minutes, then you don't want to wait for half an hour. So that's
That
how the customer preferences are changing. So we are in a very interesting time, and I think there is a great opportunity for food entrepreneurs. Only thing is, they have to reinvent themselves.
right. And these are all habit changing or habit defining
Absolutely.
opportunities.
Absolutely. 2 days ago, I normally order my medicines from 1 mg. 2 days ago, I ordered, and it was delivered in 15 minutes, and it was such a delight, right? So normally it takes 24 hours for them to deliver, but now they're delivering in 15 minutes, right? So the moment everything starts happening in the quick commerce way, a very large number of customers are going to move into that segment.
That's right. And it's just percolating down in every service aspect of our life, right? It started with
Absolutely.
e-commerce, now medicines, and God knows what's going to come next. Cars and
Food has already come, right? Food has come in a very big way.
that's right.
See, for example, some of the brands are delivering now almost 60, 70,000 orders a day, which is a 10-minute delivery. Even I think Swiggy and Zepto Cafe, they've all started increasing their total volumes in the 10-minute delivery space.
Right. Fantastic. I mean, the winner is the consumer at the end. Uh,
Yes.
a business has to be sustainable. What is your advice on valuations for restaurants, sir? How do you come to a realistic number without scaring off the investor?
See, actually, valuation, you cannot, at a very early stage, at the first level of funding, when your business is not too very established, the valuation, you have to be a little open. When I say you have to be a little open, today, typically I would look at a 2x valuation to sales, as long as the sales is a reasonable amount.
Mhm.
Other than, if the brand is well established, then it could go to 3x and sometimes to 4x. That's the maximum one can expect. For example, if somebody's business is 10 crores, they can expect a valuation of 20 crores.
Mhm.
That's it. So there are many people who come and say, sir, 10 crores, I want 50 crore valuation. That doesn't work today. Because if you see benchmark transactions, for example, Biryani by Kilo recently got acquired by Devyani. The
Mhm.
valuation is just 1.55 to sales.
Okay.
So even a brand which has got over 300 crores turnover, today that's the type of market that we are talking about. So you have to be profitable. You have to be, your brand has to be visible, has to have velocity. That is when you can command a higher valuation than 2x.
Hmm.
So there are some early first stage investments that we are doing or I'm doing right now where the valuation is more than three, primarily because they are typically category leaders or they are going to be category leaders in their space.
Hmm. And so this has largely happened in the last few years when, people have started realizing that capital comes at a cost and it's not free or nearly free as it was earlier. Are you seeing similar patterns as to what the B2B industry saw in F&B space also?
Absolutely. See, actually, I wanted to say something which is very, I would say, controversial. Most investors do not add any value to startups.
Okay.
So typically, what has happened even in the restaurant space, early investments which were
Mhm.
made in some of the QSR companies, the valuation multiples were 10 to 15 times earlier.
Oh, wow.
So they've all raised a reasonable amount of money. They've also burnt a lot of money. Today the what should I say, the luxury of burning money doesn't exist
Mm.
because everybody wants to see that you have a profitable business at a unit economics at the cloud level or at the restaurant level. You have a decent contribution, and now you want to expand that. You have the scale, you have the the SOPs, you have the brand, everything is in place. Now you want to expand that. For that, investors are willing to put in money. So if you look at what happened 5 years or 6 years down the line, that whole thing has changed because
Okay.
investors have realized that they cannot give this type of a multiple. You cannot get the multiple of a Domino's, which is a public company,
Right.
compared to, for a unlisted company which has got, let's say, 10 stores with selling pizzas. So everybody wants to compare themselves with the best of the best, but
Of course.
these, in terms of size, they are very, very minuscule compared to the listed companies.
Right.
So
Size
even
of.
if you take Burger King, or even if you take this. We have this, another brand. I just tell you the name. Their valuations are very, very low, today compared to the multiples of sales that they get is very low.
Okay. And like I was saying, this has happened over the last couple of years, or has it always been?
See, investors who understand, they have always stuck to, metrics which are right. But what happens is a large number of investors who have come in at a higher valuation, they
Mhm.
tend to push the valuations higher because they don't want to take a huge loss.
Right, and they want to exit
And
also.
investors have power, right? So when it comes to a number of investors who hold maybe more than 50% in the company,
Right.
they tend to push things and everybody has to accept. So investors have a clout in the market, no doubt about it.
So that means that an F&B entrepreneur also has to be very, very careful on who they get on board. It's not just
Absolutely. Absolutely. A financial investor is not the best bet for a F&B entrepreneur, especially at the first round. They really need to, get investors who understand the space.
right.
So, the food business is an operationally intensive business. So everything requires, it's like a clock. The clock has to work perfectly every time. It has to be a Swiss clock, right, which has got very well engineered and which works for years together without any stoppage. That's the type of operational intensiveness which is required in the food business. And many founders get tired very quickly, because this is so operationally intensive. You cannot handle growth, you cannot handle the market challenges, you cannot handle employee churn. There is a huge churn in the food business. People at the last mile, they tend to leave very fast. The day the salaries are paid, next day 3 4 people don't come. So the HR practices of companies have to be very good. So that's also something which actually impacts the brand, because the last mile or the person who makes the food and delivers the food, those people are very important, right? So if you don't take care of them, your brand suffers. So there are a huge number of challenges for food entrepreneurs, and because it's operationally intensive, it would be good for them to get investors who understand the space.
Understood. So that also brings me to the point that a lot of restaurants struggle with scaling, right? Choosing the next location or deciding to open up a new outlet. It's a risk all over again, although you might have established it in your home market. But if you're going to another market, it's going to be a risk at any time for everybody. So, what separates a single location concept from someone who's looking at genuine investment and wants to expand to, say, 15 more cities or 10 more outlets?
See, actually, most people, the buying pattern of people is the same. If your food is good, if the pricing is right, then a section of customers come and consume your food, right? Now, if you're getting such pockets in multiple locations in India, You can replicate this whole thing as long as you have sorted out your SOPs and
Mm.
you are able to produce the same consistent food across the board. For example, today, if you go and have a KFC chicken in, let's say, Vietnam and a KFC chicken in Delhi, the taste would be almost similar. You will not see a distinct difference per se, though, there may be subtle changes due to the raw material and other things. But generally, the food quality will be the same. The same thing has to be done by every restaurant. And today, it is I'm very happy to state that a lot of Indian brands have cracked it. Today, if you go to a number of locations of one particular brand, you will tend to get the same type of taste or for the same type of food. So it's very important for you to ensure that you have processes which will ensure that the last mile is going to be consistent and the food delivered is going to be consistent. So the moment you have that, then based on whatever intelligence you can gather about the local place, which means if I go to a particular place where the demographics is, let's say, all students, and
Mm.
then I know students are staying in hostels. So I will create, my model is very suitable for student or budget type of buying and quick consumption of students, what students like. In that case, I will go and place myself in places where students are a very significant part of the population. The same thing if I see that there are many for example, there are many places where uh, people who come into a city and who are taking up a job, they all stay, they're called singles. So a
Right.
lot of singles, they don't have time to cook. They're staying away from home. They want food which is economical, healthy. At the same time, they want to eat quickly and go, and they want their home type of food. In the sense, they don't want to have a pizza or a pasta every day, but they would like their dal chawal or their roti sabji and
Right.
things like that. So, depending on what cuisine you serve, what type of customer you serve, the opportunities to scale has to be carefully thought through, and one needs to take step by step. In India today, we've got a very large number of people who don't mind taking a franchised brand, which means they are willing to put in the money. They live locally. They are willing to put in the money as per your standards, and they are willing to either run it or they want to step back and you can run it, and they just take a share of the revenue. So the opportunities for franchising has also grown. At the same time, Indian brands have become very consistent in terms of many brands have become very consistent in terms of being conscious about the fact that their food has to taste the same in every outlet. And today, for example, there are brands which have got a 700, 800 outlets, and generally you will see that their food quality is consistent.
Understood. So this is also where knowing or getting an investor who understands this space becomes very important, because they will be able to tell you whether this is a scalable concept or not.
Yes, I think it's always good to have an investor who is very open, who does not push you to believe what they think is right. At the same time, who come with some knowledge so that they can share the experiences of other brands with the investor, with the founder. So what works, let's say, in a particular cuisine may not be necessary that it would work for some other cuisine, right? And there are entrepreneurs who always challenge the norms. So those entrepreneurs have to be given the full freedom of trying out things that they want to try out, because they already have a track record of doing something which is extremely what should I say, powerful, but they have not scaled.
Understood. Okay, shifting gears a little bit, and I see there are some questions about how to approach investors. But my question is that if you're approaching an angel investor versus institutional investor for funding, what are the key differences one needs to keep in mind?
See, I typically would like to tell all food entrepreneurs who are starting
Mm.
that the first round of funding has to be typically from your friends and family. If you cannot if you cannot convince your friends and family even to put in a very small amount, then you have not convinced your near and dear ones, significantly. The moment you show the passion, the moment you show that you are very keen to build this brand or build this food company, you must approach your friends and family, because today investors are spoiled for choice. What happens is, earlier, I'm talking about, let's say, 10 years ago, for us, a 100 crore food business is a very big business, right? We would go IPO with 100 crores, right?
Right.
Today, there are so many businesses which all are 100 crores plus in the food space. So if you are a very small, if you're just starting, and you
Hmm.
go to an investor, the investor will normally investors are very nice with founders. They say, "Ha ha ha, dekhenge. We will get back to you. We'll get back to you." Doesn't happen at all. So this get back to you stays, right? So I would suggest that build your business with the minimum resources that you can mobilize, and build a scalable business which has got unit economics right. That is what is very important. Discovering the unit economics, discovering what is going to work is going to be very important. And that is when you start dreaming and building about a brand in a particular category, which you can then scale, which means you should be able to replicate that. So the first round, I would always say, go to friends and family and convince them that you are going to do something. And there are two chances, there are two things that may happen. One is the business may fail, the other one is the business may just stagnate.
Right.
So if the business stagnates, kick yourself and restart, which means you have to show growth, you have to show momentum, you have to show customer love. That customers are coming back because of your service, because of your brand, because of the experience. So all these things have to be measured on a continued basis. So you don't need investors initially. The good investors always chase good brands, good entrepreneurs. So
Hmm.
after that, once you come to scale, once you are convinced that yes, you have got something which is now scalable, then you can look at going to angel investors, HNIs, or funds also. Today, there are many funds which typically would put in a small check on even, the first check also can come from a fund. That's also now the fund typically would have a thesis that they would invest on the entrepreneur more and the category that the entrepreneur has selected.
Right. Okay.
So I would say that everybody should look at doing their business very seriously. When I say very seriously, it means it has to make money, and
Hmm.
it cannot make small money. The money that you make, the margins that you make. For example, if you're a single kitchen, if you're a single restaurant, then with online, offline, all these things put together, your contribution at the store level has to be minimum 20%. Minimum 20%. If you can't do that 20%, then you are in trouble. For example, if your total sales for the month is 1 lakh rupees,
Hmm.
then 20,000 rupees should be left with you, whether it's
Ah,
online, offline, or together, so everything together.
right.
Now,
Right.
now, until unless you have 10 or 20 such contributing outlets, you will not be able to get even 2 lakhs of rupees.
10 or 20 outlets.
No, what I'm saying is if this is the scale where your sales is
Ah,
1 lakh and you're making 20,000, you
right.
need at least 10 outlets for you to get to 2 lakhs
That's right. Understood.
contribution.
Understood.
So you have to assess what is the type of orders that you would be able to get on a daily basis, what would be the average order value,
Mhm.
right? And then you have to look at whether that business can actually be viable or not. See, the problem with food entrepreneurs is they have a desire to create a food brand.
Hmm.
Can they create a food brand? Yes. Which means it is feasible also. They can create it. They can cook up something. They can get some customers. Customers will pay and other things. The third most important thing which everybody needs to ask is it viable? So desirable is fine. Feasible is also fine, whether it is viable or not. So there are many entrepreneurs who are smart entrepreneurs who know that, okay, this will work, but it is not viable. So they will not do that. They will find something else which is viable. So
Understood.
just getting signals that customers are loving it and this food is good is not good enough.
Right. Profitability is super important right from
Absolutely, absolutely.
right. And this holds true for both angel and institutional investors.
Yes, yes. Institutional investors typically will go much, much deeper
Hmm.
uh, because they have got a team of analysts who will analyze your data. They will, look at a number of things. They will compare you with everybody else. So quite a lot of detailing that they need to do because they are working with other people's money. So angels typically write their own checks,
Hmm.
right? But typically funds and institutions are playing with other people's money, so they have to be doubly sure what they are putting money in.
Understood. You have a couple of frameworks that you use, and one of them is an angel score framework to assess investment readiness. Could you walk us through how a typical restaurant business would score? What are the specifics that you look at that matter most?
See, I would say generally, restaurants can be very different because if you look at the classification of restaurants, there could be a number of different classifications. There could be only a cloud only business. There could be a dine-in only business. There
Hmm.
could be a combination business, there could be a takeaway. There are many formats of business. So take that, you keep that aside. Typically in a deck, what are the things which are important? The most
Mm.
important thing about a deck is, can you tell the story properly? Is the story going to be very interesting? Now,
Right.
what happens is typically founders, create decks where they put in a lot of information about the market and other things. But most investors know all that, or they think they know all that. What is important is for you to make every single slide that you present very unique, where the insights come from you.
Mhm.
So you present about your experience in terms of dealing with what you have done, and that is what keeps a brand separate or keeps a founder separate, because he's not talking about general information which is available in the market. He's talking about specific information that he has found out with customers, with food, with many things, right? For example, if a customer says that he wants to have a egg bite with a coffee, that's a discovery. He can say that we tried this and every customer now wants to have an egg bite, so we think egg bites and coffee are a very good combination. This is their own insight because they have done it in their store or in their kitchen and things like that. So these are the type of insights which founders need to show in their slides before they actually present public information. Public information is available, but you
Mhm.
present your own story. So you have to make the deck very interesting. It has to be storytelling at the same time with solid economics, which means you have to talk money. You have to talk about how much money you are going to make, how much money you are making today. And then, people again ask, okay, I want 10 crores, I want 15 crores, I want 20 crores, right?
Right.
But there is no clarity in terms of how they're going to use it, when they are going to use it. So good entrepreneurs need to have some support for writing their financial document well,
Right.
because most entrepreneurs are very weak in finance. I've seen
Mhm.
some of the best food entrepreneurs are chartered accountants because they
Uh,
understand numbers, or
right.
their knowledge about accounting is so good that they take care of costs. They can produce things very well. It's not that others are not. A lot of IIT engineers are also good food entrepreneurs. But I would say that the learning for a finance person is much faster. So every food entrepreneur needs to be a finance person also. It's very important, because you cannot say, oh, my accountant will come and show you, how I'm going to use the money. You have to be able to articulate that very clearly with investors, because that's what investors will be impressed with, that okay, this guy knows where is the money going to go. And today we see plenty of outstanding entrepreneurs who do all that, though they may be engineers or mbas or something else. They are able to articulate exactly what they're going to do with the money, how they're going to scale, how they're going to build teams, and are they open to bring in additional co-founders or management, because they don't know. The most important thing for founders to understand is they don't know everything. So they need to accept the fact that they're weak in this area and they have to plug in these areas. So I'll just for interest, I wanted to just share with you. I have a framework which I had built almost 6 7 years ago,
Okay.
basically because I sit in many investment committees where we need to
Right.
quickly decide, out of 100 people, we need to select 10 people whom we can shortlist for a competition or for funding or whatever it is. So I wanted to build a tool whereby I can measure everybody in the same scale, so that even if there is an error, the error is very relative. So I built a tool almost 5 6 years back, where you would answer a number of questions and then the system would give you a score. And based on the score, you will be able to know who you should pitch, whether you should look for a grant, or whether you can go to an angel investor, or to friends and family, or to a Series A, investor, and things like that. So that's sort of old. Today, I use AI extensively. So,
Mhm.
I've got tools which I've developed where, once I put in a deck, I'll get the complete information. In fact, it's very interesting that I got a few people who have already put in their decks, and I've already done the analysis of that decks. So if any of them are here, and if they give me consent, I can show it to everybody in terms of what was the deck and what is the outcome of that deck. All these things are done in, let's say, 2 to 3 minutes, and it tells you what are the areas that you need to improve.
That will be great. I mean, if you can name the brand, we can see if they're there.
Happy Rhino, Millet Me Crazy, Shuddh Swasth, and KIC. These are four decks which came to me today. Any of
Uh,
them here?
KIC, Millet,
Happy Rhino.
Happy
Yes,
Rider.
Madan from, yeah,
Madan is here.
Madan from Happy Rhino. Yeah.
Madan, are you okay if we share your deck here? Just let us know in the comment.
I won't share
Sure,
the deck. I will share the output of the deck,
sure, sure.
output of what I've seen.
Sure. Madan is okay with it. Devesh, also let us know your brand so we can bring that up if time permits.
So this is can you see my screen?
Yes, sir.
So there is a pitch deck evaluation and market research report. So it says Happy Rhino is a Bangalore-based early-stage cloud kitchen and casual dining startup founded, operates a multi-cuisine restaurant. So pitch quality and clarity is well structured, blah, blah, blah. Overall score is 4 out of 10. While Happy Rhino addresses the real market need and the deck shows vision expansion, franchisees, product extension, and demonstrating viability and differentiation, key components like traction, unit economics, and team strengths are weak or absent, dragging down the overall score. Okay. So I'm not going through the full thing. So it gives the detailed scoring like this. What is the
This is
problem, solution, and product, market, competition, business model, and it scores all these parameters. Go-to-market strategy, 5 out of 10. Team, 2 out of 10. Financials, 2 out of 10. Right? So it scores this. And then competitive benchmarking. It shows, for this brand, who are the competitors? What is it that they have raised? What is their sales and traction? What is the differentiation? Then what are the risks for this business? So
Mhm.
for Happy Rhino, what are the risks? Then investment thesis, who are the people who can invest in this? So, you need to find the right type of investors. So fundraising probability. Fundraising probability unlikely. Given the current state of it, it's unlikely to raise a significant funding round in the next 6 months. Okay. So it is giving you a verdict also. This is I make a disclaimer. This may not be true because it's all done with, information that I have collected at the same time written by AI. Actionable items. It also says what are the things that you need to do to improve the business and pitch Happy Rhino should do all the following. Okay.
And this is just on the basis of one deck that they.
Yeah. This is then what will be the exit path?
This is comprehensive.
Website and social media audit. Where
Fantastic.
where are they in terms of website? Facebook 350 likes, Instagram, LinkedIn, Twitter, viability on food platforms. They have a 4.1 rating in Zomato.
This is fantastic, Madan. This is a complete review. I think a traditional analyst would have taken months to come up with this.
So this is again the market research for Indian food service market research report. So it also gives you that.
This is just brilliant.
So at least it gives you some direction in terms of where you stand in comparison to other brands. And, this helps me, evaluate decks very quickly. So today I got a Shark Tank founder, who was referred by another founder, and he sent me his deck. And I'll just tell you what he told. What he is, I don't know him. He got his deck, and I shared it with him. This was his. Read the entire thing, mind blowing. What an analysis. Got a few actionables
Mm.
sharpened too. This is what he had to say. So it really helps people to understand where their deck is, what are the areas that they can change, and it makes it better. So this is a continuous process, right? So no deck is complete and no deck is going to stand the test of time until unless it's funded. So that's something which I wanted to. I'll be sending this, whoever has applied, given their decks, I will be sending you the link for getting your report.
Fantastic. That would be, I think, very helpful. So there are a few people who haven't sent it yet, but we've shared the link of where they can submit it. So go ahead and submit your decks and.
Yeah, that's going to be a lot of work for me. So I'll keep it at let's say 10 or 15 people, who are participated here. So I will do it for them.
So yeah, I mean,
Though it doesn't.
first
Yeah.
come, first serve.
Yes. Yes.
Amazing, amazing, and I believe you're also a big you're a follower of the teachings of Ramana Maharishi, and you developed a philosophy around practical decision making for your business.
Actually, I practice the art of doing nothing, but I failed in doing that miserably. So what the Advaita teaches you is to not do anything, just be the way you are, be as you are. That's what we try to do. So there are many situations in business which is very, see, the journey of a founder is very, very lonely. It is very tough.
Hmm.
So there are many a times when you are very tired, you just want to quit and say bye.
Yeah.
So these are the times, even you can't share some of your problems with your wife or girlfriend or boyfriend.
Hmm.
So that's the type of journey that a founder typically has got. So I have been a founder myself. I've run businesses for a very long time. And over the last 10, 15 years, I have been part of the journey of many founders. So I've handled founder disputes. I've handled investor founder disputes. So you require somebody who can be very neutral, who can actually listen to your problems and maybe give you some guidance. And it's up to you to take it or leave it. So I play that role, and being very inert to situation really helps. For you to not respond or react using your personal likes or dislikes. So you have to be very open, and that is what makes me very comfortable that I will be able to do justice in any given situation to a founder or to a team. So even if there are founder disputes, I'm able to amicably resolve founder disputes and get both of them or two, three of them going in their own way without much problems. So this comes purely from a very spiritual bent of mind, which means we are all equal. At the same time, we need to, the more power we have, we need to exercise it with extreme responsibility and caution. So I always think every entrepreneur is great. Only thing is he's not discovered how to become greater. So I respect every entrepreneur who is getting into this journey. They may be very small today. I have seen many entrepreneurs who are nothing but today who are all unicorn founders. So
Right.
I respect everybody, and I want, and the philosophy that I practice gives me the power to do this very easily without
Great.
any stress.
And is there someplace people can read about this philosophy?
Yeah, it's all there in the industry today. Information is no longer a problem, right? So you've got AI tools, you've got internet, you've got YouTube. There are great universities where you can do PhD also.
Right.
All you need to do is you need to have an intention that you want to do something or you want to pursue something. Today, the world is full of resources and opportunities, and also people who can help you.
Of course, of course. Just have to ask.
Yes, absolutely.
Okay, fantastic. I know we're at the top of the 45 minutes we had, but we have a couple of more questions and then we can open up the floor. One question I had was that restaurants that are currently experiencing cash flows, are there any creative funding alternatives beyond this traditional equity investment?
See, revenue-based financing has worked very well for restaurants. So,
Okay.
if, for example, if you're doing, let's say 50 lakh business every month, out of that 30 lakhs is coming from Zomato and Swiggy. This
Mhm.
30 lakhs of money can be kept in escrow or can be escrowed, and you can get, let's say, six, seven times of that on day one. So there are NBFCs who would be able to give you this money. The rate of interest would be a little higher. That is one. Other than that, if you are registered under Startup India, the MeitY registration, then you can look at a credit guarantee scheme from the banks. That's a little tough, but if you know the right people, right agents, you can crack it. There are many food entrepreneurs who have taken that money and who have been able to build their business using bank loans, especially through the credit guarantee scheme. Other than that, Startup India Seed Fund is also there. I saw this. There are a couple of companies which have got funded through Startup India Seed Fund also. 25 lakhs to 50 lakhs, they could give you. So there are a number of today, there are a number of ways by which you can get yourself financed. And revenue-based financing is the best for companies which are generating revenues. The
Okay.
other one is franchising. So if you have
Uh,
a running store which is profitable, then you can sell the store as a franchise store and pick up the cash and invest it in another store.
Understood. Understood. What trends are you seeing from an investment perspective in going into 2025? We're already almost halfway done. Beyond 2025 and 2026, that owners should position themselves and they can take advantage.
See, I have a very different view about the food business today because, as I told you, today we have at least five, six brands which are all touching 1,000 crores. Indian brands. These are
Yeah.
all Indian QSR brands or Indian, food brands, which are all close to 1,000 crores or beyond 1,000 crores. So in this marketplace today, if I have to invest, I will always look at somebody who would be a candidate for acquisition by some of the big players, which means they are going to be a category leader or they're going to get, they've got something unique because of
Mm,
which they will be acquired by some of the larger players who are coming in, or these people themselves will become large over a period of time. So I think today food entrepreneurs who are starting afresh, they really need to look at new categories where they can excel and lead. So there are plenty of food categories which are coming up or which are there, which are prevalent. Because if you look at the India's market, there is a huge market. Right from premium segment to absolutely rock bottom segment, which means people who cannot afford. Everywhere there is a huge market. So you have to position and understand who is your ideal customer, and within that you need to create category. For example, we all know that South Indian food is very difficult to do, right? But we do have many good brands which have come up with South Indian food, like maybe a Rameshwaram Cafe or Sangeeta's or Sharavana Bhavan and things like that. But today, I see a couple of brands who are absolutely in the affordable category and who are doing the job extremely well, which means they have excellent kitchens, clean kitchens, and their price is such that anybody will be able to. If two people go and have breakfast, the cost is not going to be more than 100 rupees. That's the type of affordable food that they're able to give. So this also has got a 80% of India's population wants this type of food, which is clean, which is healthy, at the same time very cost effective. So if you are positioning yourself in a category which can actually crack that, then funding is not going to be a problem. But if you're going to say, oh, I'm also a pizza brand, then everybody will say, okay, what is your market share? How are you going to compete with Domino's or A, B, C, D, X, Y, Z? So it's very important for you to become a category leader, at least one, two, three, if you're playing in a small place. Now,
right.
typically what happens is most food people, they want to do everything. They want to do Chinese, they want to do continental, they want to do Indian, they want to do sandwiches, they want to do bakery, everything they want to do in one place. Now, that format, scaling is going to be a very big challenge. So it is very important for people to decide how they want to scale it. I'm not saying that that's not possible, because there are many cafes which do that. They supply a
Mm,
lot of food of all types. But it's very important for you to choose how you want your brand to be visualized by a customer. So I would
right.
say that the challenges are, there are opportunities in categories, and you have to show velocity, and you should be able to take market share from if you're competing with the other people. If you're able to show that, then there is funding. Otherwise, it's tough.
Wow, what great insights. I think this is a much needed reality check also. While you're busy running your business, it's important to keep an eye on the metrics, the people, the feedback. Also, an eye on the future. Okay, I'm going to just open up the floor for questions now. We have four questions so far. So we'll just go top down. First question is from Devesh. They run a brand called Sendha Namak, a healthy cafe, and they're asking how to do valuation of my brand.
It's very simple. So if you are, let's say, doing 10 crores of business,
Hmm.
the base valuation that you can expect is 20 crores. If you are profitable, maybe you can expect 25 crores. And it 2.5 times. But if you're struggling, then it can be 1.5 times also. But typically, what happens is when you're not ready with the valuation, it is better for you to raise money based on a forward valuation. For example, if you are sure that once you get money, you're going to get to profitability, or going to get to a number which is much higher, then you can keep your floor and a cap type of a valuation, which means that if you reach that number, then the conversion happens at that. Otherwise, it happens at a discount to that. So I think valuation, look at 2x as your multiple today for any brand which is not a premium brand.
All right. Devesh, you can also submit your deck to that link we shared, and Hari sir can respond to you if you're in the first 10 or 15. A couple of questions around the same about how to get an investor on board or how to approach an investor.
See, today with the internet in place, with LinkedIn, with so many social media, see, getting an investor is not at all, or identifying who is an investor is not at all difficult. But what will you do after that? That is what is the most important thing you need to answer. So there are plenty of people who have opened shop. wanting to fund startups, right? So today there are, I think, 100 plus angel groups. There are, 300 VC funds. All of them are in the business of giving money. So it's very easy for you to get to an investor or understand who is going to be an investor. But what is important is what next? What are you going to tell them? That is what is going to be most important.
The story.
Yes.
And any recommendations of any platforms that they can look at to figure out how to go about this?
I think there are, see, I think the best place to start for, people who are looking at the first round of funding is to go to the angel networks. Because
In
angel networks would typically fund anything from 50 lakhs to 5 crores, which is good enough to start a business. So, VCs typically don't want to take a big risk.
Hmm.
They want to be very sure about, that the business model, the product market fit is already done. They have
Hmm.
a good team and things like that. So it's always good to go to angel investors and also friends and family.
Friends and family. Oh, got it. We can take one more question, and this question is from Naveen. This is more around a customer experience question. They said they have an Android and iOS app for their cloud kitchen. They're working on rebranding and relaunching. Um, how important he's saying is the question is how important do you think is the UI UX of the app to get customers and to get funding?
To tell you very honestly, earlier I would have had a different answer, but today I have a different answer. See, today billions of people use WhatsApp. So you
Right.
don't have to teach them how to use WhatsApp. They
Yeah.
already know, right? So if I have an application over WhatsApp, that is going to be the fastest in terms of adoption. Similarly, people use Swiggy, Zomato, or many of these other platforms. The flow, the feel, the buttons I press, everything is very similar, right? So I would like minimum friction for a software to be used, right? So that is why I tell people today that follow a platform which everybody uses and use that as the interface. For example, ChatGPT, after it has come, everybody has started, writing software as if it's ChatGPT. So
Yeah.
this is what makes things familiar, and you should have least friction with customers. So software should be very simple, easy to use, and people are using WhatsApp. So I think that's one of the reasons anything which is like WhatsApp or based on WhatsApp will have very faster adoption compared to other things.
Yeah, that's a very powerful insight, and we've seen a lot of WhatsApp usage when it comes to restaurant marketing also. Yeah, with that, we're at the end of the question, sir. Before I let you go, uh, where can people get in touch with you if they have more questions, if they want some help from you?
Uh, I'll share my email ID in the chat box.
Great. And
Uh,
you're active on
or
LinkedIn also, right?
Yeah, I'm active on LinkedIn also, so people can approach me. I'm very easily, available in social media and other places, and always happy to help food entrepreneurs because it's a very tough business.
Yeah, it is. Just a couple of more questions from my side. What are you currently reading, and what do you recommend everybody in this business should read?
See, to tell you very honestly, you have to read how to unlearn. If there is a book which tells you how to unlearn, that is the best book which I can recommend today. Which means, uh, you know, conventional logic is good, but at the same time, you have to look at how the world is changing, how the young customers today are behaving. For
Mhm.
example, in our times, we would always react in a particular way to a brand. Now, today's Gen Z reacts in a totally different way to brands. They don't care about loyalty to a brand, whereas we are still loyal to the brand, right? But Gen Z is a very strong buyer of things, right?
Right.
Today, most of the Apple phones which are bought by Gen Z, and Gen Z doesn't earn that type of money. Their parents pay for that, right?
Yeah.
So it's very, very important to understand how to unlearn many of these conditioned things that you already have because of your experience. So I would say experience is an advantage, but it also acts as a very big disadvantage. So it's always good to empty your mind and allow newer thoughts to come in. So I definitely think Naval Ravikant is a guy, who you should read. He's written, he's not written a book, but, people around him have written a book where he talks about his philosophy. And most of his philosophy comes from Stoicism or even Jiddu Krishnamurti's philosophy. So it's something which actually challenges you all the time, and also keeps you very active and young. So you are young in the mind. So I would say that is one thing which people should look at doing, and anything is fine. The other thing is, I think it's important for people to be happy. The most important thing in life is to be happy. So, but what happens is founders typically get into very stressful situations because of the business, because of their commitments, because of the challenges of the market. But life is to be taken very easily. Things will fall in place. You should just allow things to be as they are. So I would say that look at your work-life balance, chill and laugh. It's very important to smile, and if the life actually is beautiful if you can actually appreciate that the good and the bad are all part of the same thing, right? So I would suggest that always be conscious about the fact that things are going to change. So today if there is a good time, it's not going to continue, and today if there is a bad time, it's also not going to continue. So just smile and move forward, and move with people around you. Be good to people, and people will always come back to help you. So I'm I've given too much of gyan.
No,
Uh,
wisdom, absolutely. And yeah, one last question I have is, which is your favorite restaurant and what do you like best there?
so to tell you very honestly, currently my favorite restaurant is Harajuku Tokyo Cafe
Okay.
in Gurgaon. It's a Japanese cafe.
Yes.
Their food and items are amazing. So that's something which I've discovered just a year ago, and I love that food. Other than
Okay.
that, of course, there are plenty of other places. One cannot, what should I say? I can name, rattle at least 10, 15 places where I love the food. But I have turned vegetarian, so I typically love vegetarian food. In Calcutta, there is a club called Bengal Rowing Club. The South Indian is some of is the best out there. Similarly, there are places in Bangalore. There are outstanding cafes, coffee, food, and you cannot. There's a huge list. That's what I would say. So I love all types of food, and I think it's all about how the food is made, which is very important, right? So if the food is made properly and with care and love, the food tastes very nice.
Absolutely. Thank you so much for spending this hour, sir, with us. It's been an absolute delight, and I'm sure a lot of folks have taken back a lot of learning from this. And yeah, thank you once again. Thank you, everybody, for joining in.
Thank you very much. It was lovely interacting with all of you. So you can, if anybody wants to contact me, my email ID is with, I think, have you shared it, the email ID?
We've shared the LinkedIn profile.
Yeah. Okay. Okay. That should be good enough. Thank you very much. Bye bye. Have a nice day.
Thank you, sir.
Bye.
Thank you. Bye.